Here we are at AFP. Thank you guys for carving out time to be on FinTech Corner. We've gone live here at AFP. Lots of action happening. It seems like this conference is busier than the last couple. Maybe it's because it's in San Diego, and San Diego's cool. But you guys from New York, a little bit of a travel you got in here. Thanks for carving out time to be with us. I'm Brett Turner, founder and CEO of Trivada. I'm sitting in for the podcast master, Joseph, and you guys are?
So I'm Joe Vittoria. I'm an investment platform specialist with Morgan Money. I've been on the team since we started the business, and I work for Paul, covering basically anything and everything Morgan Money.
Paul Przybylski, head of product for global liquidity, as well as head of Morgan Money. Good to see you, Brett.
Yes.
It's been a minute.
Yeah, it has been.
Yeah.
Well, so here's one thing, too, that the world has changed so much. I mean, it feels like it's now changing there's something, big happening. But aside from
5% today.
I know. I saw that this morning, and that's a topic for today, right? Like, think of it where we've come out of this period of like 10 years of just complete famine. And then the last few years, the rate environment, massively different. It's got to be fun. This has got to be.
Yeah.
What's it like right now versus where you've been?
Yeah, I mean, listen, it's obviously fun when the rates are above zero. So for our clients, the yield, the attractiveness of the product of a money market fund, which are close to $6 trillion in the U.S. market, is fun. I think at the same time, you got to watch what the next 12 to 16 months will show us in terms of where we're heading in the economical direction. I think there's going to be some stress at some point down the road with that. But for now, I think clients are definitely enjoying the yields that the funds are generating. Generally, you see yields above 5% on a government money market fund, which is a great investment product relative to deposits. But I think as you see Feds take actions, there's a November meeting coming up in the next week, and then potentially rate cuts in the future. So we'll see where this all heads. But for now, it's a lot of fun, as you're kind of characterizing it. But at the same time, it's a lot of stress in the market and anxiety as well that the investors need to be aware of.
Yeah, I completely agree with you. And honestly, to add to that, just generally speaking, money market funds have not been relevant, or money product has not been relevant for treasurers or treasury teams in 15 years. We went through 8 or 9 years of zero rates. So to your point, this is the first time we're really seeing treasury teams, cash management teams, and honestly CFOs asking about, what can I do with my cash? Can money market funds be viable? It's become a much more, let's say, hot button topic than it has been for a long, long time.
So if you kind of even just think in pragmatic terms of like traffic at the booth this year, maybe the last couple of years, but versus go back a few years, it's got to be a lot more foot traffic.
Listen, it's tough to sell a product that returns 1 to 3 basis points. It's easier to position a product that has very attractive returns. So I think there's a lot of general excitement in this space. And obviously the role of Treasury has changed over time, where the department is looked at as a value add proposition now, where they're looked to as just not necessarily in the reporting element, but more in the strategic driver direction, where revenue is a factor, net interest income is a factor. So for them, they need to effectively continue producing, because once the firm, for example, gets used to a return that is favorable, that expectation from the CFO is going to continue throughout its course now going forward. So that role of treasurer is dynamically changing to account for how markets are behaving.
Yep. So I was going to say, just is that also, in some ways, are treasuries even used to that? Or have to kind of dust off the rust a little bit and like how to manage?
Many moons ago, when I worked in Treasury, all we were really focused on was keeping the lights on. Like, you pay the bills, you set up the invoices, you sort of coordinate suppliers, and then you integrate systems, etc. But it was mainly, okay, you're a cost center. You guys are costing me $300,000, $500,000 a year to run your systems. You're earning nothing on money. Let's see if we have excess cash. This is now, the tables are completely turned. For the first time in, I can't even remember when, rates are covering technology costs for the most part, and you're definitely earning enough on even marginal amounts of cash to then, to Paul's point, be a value add to the business and be strategic about sort of what you can do.
Yeah, I mean, I think just adding on to that, I mean, you asked the question, are they ready? The question is, some are and some aren't. I think the ones that are adopting technology are going to be in a far better positional place. Even looking around this conference, as you said, I mean, there's a lot of booths here but I see a lot of new names from a fintech space who are kind of getting into the value chain of the treasurer's office, which, it's all about helping them to be positioned better to take advantage of the market.
And so if you think of now treasurers doing more things, they're kind of getting back to a little more of the broader toolkit that they've had. They just haven't maybe exercised some of those muscles. I mean, do you think even the treasury profession and then tech changing so much, all these things, do you think they're kind of positioned to do that? Do they still need to evolve a little bit? They're having to be a little more strategic?
I definitely think the conversation has changed in the past 4 years. I think that the technology's advanced. Technology's become a much bigger part of that because it's always the conversation about doing more with less. I mean, even though rates are up, and to Paul's point earlier, there's still a level of risk and uncertainty in what's coming, so you don't want to overhire. In these treasury teams, you see a lot of very lean teams trying to do a ton with the same amount of people. Now they're implementing more systems. They need to sort of have expertise on the ground, and that's where a company like Trivata or a group like Morgan Money come in to then continue to make it, let's say, further leverage existing resources to add value.
Yeah, I mean, I think, like, if you look at what is out there today, right? Like, I mean, you saw the development of APIs in the last 2 to 3 years, which wasn't around as a concept before. You had to deal primarily with either Swift or SFTP based. That's great. Concept of ChatGPT or Chat AI or machine learning, those are new ideas that are still starting to find a foothold in how to make the efficiency and the technology play at the treasurer office to help compensate some of the resource constraints. But I think some are definitely better than others. It depends on how big the company is, how much resources are being dedicated to tech. Generally speaking, a treasury department is broadly tech underfunded versus tech overfunded. Large scale products like TMSs and integrations of those take time and resources for them to budget for. So I think it's getting there, but at the same time, I don't think we have really reached the pinnacle of that.
Do we think, like, the days of the almost just free money, that decade, do you think that's well behind us, or do you think we start to kind of come back down over the next...
No one's got a crystal ball, Brett. What are you asking?
Of course. That's the crystal ball question. You guys got to answer. I'm trying to corner you for that.
Yeah, the crystal ball question is that, I mean, if you listen to the Federal Reserve Chairman Powell, he'll say rates are here to stay longer and higher. Inflation is still not where the Fed would like it to have it.
Yeah.
So I think there's, for the next, I would say, reading what the futures market is pointing to, next 12 to 16 months, you expect rates to remain relatively at the current level, perhaps slightly declining over the course. But the crystal ball answers in the data that comes in and gets fed into the Chairman Powell's effectively desk. So it's hard to say.
Powell
right?
question.
It was a very diplomatic answer too. Like that was well placed. That was good.
That's why, that's why I'm here, Joe, to have the diplomatic answer to Brett's curveball.
Exactly. He's trying
to. But at the same time,
an answer.
There is no right or wrong. But I think, if you think about the investment universe of a treasurer, even if rates do tick down 100 basis points in the next 12 months, you're still talking 4% returns relative to a deposit or an alternative vehicle that isn't going to have enough of a spread differential. And then just remember, as rates go up, the deposits lag the effect of that. However, when rates come down, there's an immediate effect of that. So money market funds and short-term investments will be seen more favorable in the second leg of this interest rate hike.
Got it.
Yeah. No,
okay. So Joe, what's the non-diplomatic answer?
Right, you can't,
I'm not going to give you a non-diplomatic answer, but to answer,
keep this in the rails, right?
Like no one's going to give you a 2 to 3% target forever. But I will say, I mean,
Joe says
target indefinitely.
10-year lock.
We will never ever go back to zero. No, that's not true. No one knows.
Yeah, we don't know.
Paul hit the nail on the head. Like the data is going to be entirely dependent and drive everything. But I would say, the likelihood of us going back to zero, the further away we get from it, is less and less and less. Yeah. That's not to say there's no chance, but hopefully it's not something that we're talking about in our lifetimes. Again.
Well, let's talk innovation. So one of the things too, I still kind of marvel at, we've known each other for a while now, is just like, and a big, passion of mine and what we've done at Trivata is just build something really new. we're disrupting something. And you guys really had the opportunity to do this with inside, JP Morgan as a big institution. There's, it's tough for the bank to innovate, not because it doesn't want to, but there's just a lot to that when you're as big as they are. You guys did it. You guys pulled it off. So tell a little bit of the story, like building a product and, just
Do you
able
want a
to
diplomatic answer?
Exactly. What kind of answer do you want here?
we're gonna start with the diplomatic answer, and then Joe, we're gonna go through the non-diplomatic answer. I think that's a good way to cut it from here on out.
That sounds like a good buffer to have.
Should we start with non-diplomatic
Let's
first?
go non-diplomatic.
Okay. Then you can clean it up.
Clean up the edges, yeah.
God's honest truth, it was just a lot of blood, sweat, and tears, a lot of design sessions, a lot of conversations, a lot of late nights. But really, it's because we started out with a clear vision of what we wanted Morgan Money to be. And we knew, generally speaking, what the ultimate goal was. So we had a bunch of very smart people sit around a table and have a conversation. A lot of us are still here. I'd like to count myself in that number. But it's basically, we figured out where we wanted to get to, and then we would not be defeated. I mean, it was one of those situations that we had a very clear picture. We worked our butts off to make sure that we could get to the place we wanted to get to, and then went through the right channels through JP Morgan to just continue pushing forward until we made what I humbly believe is the best platform in the market today in our space.
And it's like you had said, it's really the first kind of new platform really in 15, 20 years or?
Definitely.
Yeah. So listen, as you said, we're a bank, right? Obviously we're bank regulated. There's a lot of bright people in JP Morgan that have a lot of ideas, but they just need a lot of time flushing out to ensure all the rails are going on the right side. We were fortunate enough to Joe's point, we had a very clear vision of what we wanted to build. And when we presented that to the senior management teams across asset management, it resonated because we knew exactly what we wanted to build. What we needed is the buy-in to go pursue that, which sometimes that is the hardest part in JP Morgan because it is a big place. There's a lot of decision makers, a lot of influencers. And I think rolling out a global platform is also challenging because you have to deal with different jurisdictions. But at the same time, we were fortunate enough to have, guys like Joe, guys like Dan, and others on a team that, as he pats himself on the back for his humbleness, on a team that kind of really made it into their, drive to push it there. A lot of great ideas generally die at the first points of resistance.
Yeah.
And as long as you keep pushing those walls, and you got to work with your compliance team, legal teams, external legal, all these elements will end up eventually get you to a place that you want to be. It definitely wasn't easy. As we go through internal committees, we make decisions, we make adjustments of those decisions. But at the same time, like what you need to continue is to remember, am I doing the right thing for my clients? Am I doing the right thing for my firm? And is it the right thing for my business? If those three boxes check, generally speaking, JP Morgan will support you in your direction.
Cool.
And just to add part of the non-diplomatic answer, one of the reasons I think that we are so successful, and we have been, is that we do have differing views in the team. It's not like everyone rows in the same direction. It's that
That's shocking, Joe, to hear.
Well, I was going to say, it's because you do have a gamer on the team.
I do.
And that's a weapon that others just can't deploy.
No, of course.
Yeah.
I understand this generation.
We'll get to that in a minute.
Okay.
I understand this generation.
All right.
That's right.
Well, so if you think of that, like how APIs have come on the scene, you said, the last 2-3 years is new. How is that impacting even, I know we've, have an API built between, our systems. It's definitely provides that seamless experience. That's super cool. As that's come on, how is that? How do you guys think about that? Where we've been, and then even going forward, even opportunities, how that may open up and be leveraged.
You want to go first?
Sure. When we think about APIs, it's a way that systems talk together. That's something that has been around forever. The difference between 30, 40, 50 years ago, 25 years ago, and today is we have a clearly defined system. It's becoming much more prevalent across the industry. You can do so much more with API today than you could previously. And I think that there's industry buy-in. As we continue to move down that path, let's say some of the payment networks, some of the concepts of the traditional rails may or may not be replaced by APIs, and it's because of their flexibility and their power behind them. You can do so much with an API, and so we've embraced that and really tried to drive that forward as part of our key tenets under the technology builds of Morgan Money.
Yeah, I mean, I think we're still like nowhere near where we should be, right? I mean,
Agreed.
The fact that it takes a client, 60, 90 minutes to get their money back after they redeem is absolutely insane.
Yeah.
In my perspective. So I think you got to get down to, if API is supposed to be real-time transmission of, or near real-time transmission of what the data load is, then it should be completely agnostic of what you're moving. I think it's great that what we have achieved so far, with you guys and our broader API toolkit, but it's still not enough in my perspective. Like, we still haven't gotten to the point where seamless payments are happening. Even more data is being transmitted for further insights to be managed. So I think we still got a long way to go. I mean, I think we're still using the other file formats in certain cases, because in some other elements, clients are also just not ready to accept that.
Yep.
So we need to kind of just also be aware that where we think is the right time or what the right API construct should be doesn't mean the market is ready at that time to do it.
Yep. Yeah. So if you think, you said data, the data is sort of just running so many things right now, and it's going to continue to do that. So you think, and you mentioned earlier, Gen AI.
Yeah.
It's got to have data, like feed the beast, right? Yeah. So how are you guys looking at AI and Gen AI in particular through the Morgan Money platform? Yeah. How do you guys think of this as you move forward?
So we already have AI running in the background where it looks at risk management when it comes to trading. So since we have API trading and our backbone is built on APIs, we can actually tell clients instantly by using our AI infrastructure that says, hey, you're either duplicating trades or you're making some incorrect entries on the platform. Now, that isn't necessarily the front end Gen AI, because Gen AI could run in the background or it can run in the front end where client can interact with it. And I think that is very powerful to have, which is, you could have clients logging onto the platform and saying, for account 1, 2, 3, 4, 5, 6, give me the dividend for the last 6 months.
Yep.
And it should be able to pull that and explain how the calcs were happened, and at the same time, give them the number so they can move on to their next task. We're looking at those elements of AI. I think we're at the early stages of that. But I do see a lot of application from our client base. But I also want to be smart about doing this within our platform, because I don't want it to seem as a sophisticated chatbot versus actual AI. Because I think there's a difference between those two.
Mm.
Yeah, because to Paul's point, we've seen a number of these things out there where AI is used for chatbots and you're trained for 4 or 5 or 6 different things. We want to get to the point where it's meaningful and you can actually leverage that AI as another employee. Now, the key, you asked the question about data and how we're thinking about leveraging it, or how we're leveraging it with AI. So we've talked about our general data that clients are able to access, that's fed into Trivada, all that sort of stuff. Now, moving to the next use case, we're talking about things, we're thinking about things, and sort of how we can potentially leverage that AI tool to build out other things that we don't necessarily want to talk about yet.
It would be really cool. Like, if you are able to log into our platform and based on your trading pattern history, the AI will say, you are here to place the following trade because of the following events have happened in your history.
Yep.
So here's your stage. Here's the trade pre-staged for you. You got to do it.
We are talking about it. I didn't want to talk about it yet, but it's
like, there's you can go in so many different directions. Or like when you log into,
we've had everybody watching sign an NDA, so everything's good.
Oh, no problem, exactly.
Yeah, I'm sure they did.
Makes perfect sense.
Yeah, but that's
super cool.
To talk about these things and actually doing them is a totally different world, right?
And also making sure that when you're building them, you have the appropriate guardrails around them, so you're not then screwing the client.
Yeah.
How do you think, though, too? I think that's the biggest thing is, like, any kind of things come into finance, treasury. You're talking about professional risk managers, like that wall's going to be, you got to prove it before they're going to use it.
Yeah.
And so how do you get over that, go from being a toy to being like this proven, because, accuracy is, they've been able to witness it. They've been able to live it. So therefore they're going to allow it. Like, how do you, get through that curve, you guys think? like on your business?
Yeah, I mean, obviously in our side, it all starts internally drawing it up. And then we have, groups of folks we can bring this through they'll pick their holes at it. And then once we are able to put it into production, what we normally like to do is have a couple clients come in and be our beta testers.
Yep.
To really then have their teams of their risk managers, to your point, pick it apart.
Yep.
And then make edits that as we go. Because ultimately, that's how we build Morgan Money. It was completely on that kind of concept where
Nice.
It was rapid builds, fails.
Sounds like a
rapid
startup.
builds. Yeah.
Yeah, kind of.
It was a startup.
Yeah,
It
pretty
still
much.
is a startup. Yeah.
Well, so what would be, not revealing your hand too much, but what are maybe the couple things you guys get most excited about that you're trying to like get to and provide that level of next level kind of build or value for your customers?
Well, me personally, I'm excited to expand what we invest in, expand the universe, expand our offerings.
You mean product sets?
Yeah, product sets, exactly. So right now we're focused on money market funds, all short duration, but talking about the next step beyond that, how that fits in the treasurer's world. I think partnerships are a big part of this, sort of making the life of a client easier. One glass is what Paul likes to say, where everything is sort of going through one central system, or clients can leverage things how they like. Those are two of the ones that I'm most excited about.
Yeah, I mean, I would add a third. I mean, I love mobile. I am all about mobile technology. And not just mobile in the sense that you can read your statement. I'm like physically what you're doing on the web version.
Put the experience in the mobile
app.
Yeah. Okay.
Yeah. So for us, like that is a big push. I would love to tell you more about that, but sadly, since no one signed the NDAs, I will not tell you more about that.
Well, I'm most excited about the fact that rates are going to be, locked in for 10 years.
According to Joe.
I've already
Guys, don't bucket me into that. I'll get in trouble here.
Too late. Too late.
No, it's great. Well, of course, we only have a couple minutes. Joe, we've got to tell the story. So I love the story.
It's a good story.
You get a little bashful at it. I just think you're being modest. But this whole story about you being like #1 gamer, you're a prodigy.
Not number
It's
one.
probably why Morgan Money is so cool, because like you're the weapon on the team to help make that happen. But tell us you got how many kids did you put into submission in your run up to becoming world #1 in Warcraft? Or how do I phrase the question appropriately?
This is why anyone that's a gamer is going to understand this. Okay, it's not an easy thing to say one or the other, but I was technically, by some website, rated the #1 World of Warcraft damage per second DPS warrior back in the original World of Warcraft.
That sounds absolutely badass.
Name was
I think
vicious.
that's cool.
My guild was OSNAP. Guild leader was Sinner, and we were good. We were the first to clear AQ. I had an Ashkandi. I'm a giant nerd, if you couldn't tell. But yeah, we just, honestly, I spent a lot of time playing this game as an 18-year-old.
As cool as that is, and they still let you on the Notre Dame football team too. So it's like you're a man of many talents.
Walk on to the Notre Dame. Yes. I had a lot of fun with a lot of things in my life, and now
Joe's a man of many talents.
I know it's great. Yeah. I think it shows up in all of the attributes of Morgan Money.
Paul's built a really good team. Let's put it that way. It's not. We have a very, very strong team, and honestly, everyone.
They were all walk-ons.
Yeah.
All walk-ons. Dan is a national championship fencer. Katie still to this day is a national horse jumper. She just came back from a competition this weekend.
That's so cool.
We had a very strong
That's
team.
awesome. Like you're a tennis
player.
Tennis guy too, right? Yeah.
Paul was a Division I tennis
there you
player.
Go. All right.
Did pretty well.
Unfulfilled dreams that a lot of us have.
All right. I love it.
Yeah.
Well, I think all that chip on your shoulder adds to the like you got to have that if you're an innovator. I feel like I've had that, had to have that my whole career. So anyway, just great to spend some time with you guys. Always fun.
Brett, always a pleasure.
And just super excited about like what the future holds and things that we can continue to work together on.
Definitely.
Completely agree.
Thank you.
All right.
Let's not talk about World of Warcraft ever again. Thanks.
We cut that piece out.